Dollar Swiss Daily Forecast, January 10th, FXEmpire.com. For the last week or so, the market has been talking about the Swiss National Bank's chairman, Philip Hildebrand, and the scandal surrounding him. It turns out that a day or two before the now famous floor the central bank put in at 120 in the Euro-Swiss pair, Mr. Hildebrand's wife decided to buy the pair to make roughly 75,000 Swiss francs. Against this backdrop, he resigned during the Monday session. While the market will have to decide what that means, a lot of the initial chatter had people selling the dollar Swiss, euro Swiss, and most other currencies against the franc. However, it was shortly after that that the Swiss National Bank announced that the policy of a floor at 120 in the euro Swiss was still intact. With this in mind, it created a sell-off in the franc against the U.S. session. Weighing against that, of course, is the fact that the U.S. dollar fell against most currencies in general. The U.S. dollar Swiss franc pair specifically fell the most, and this is probably much to do with dollar weakness than anything else. Looking at the technicals in this pair, you can see, and we've mentioned this more than once, that the 93 level is massive support. Of course, 95 could be supportive as well, and let us not forget that the most recent high is higher than the one before. We are starting to see the very definition of an uptrend. With this in mind, we like buying this pair. We like buying it a lot. There are several different reasons, one of which, of course, is the price action, but just the simple logic of it. As the Swiss National Bank continues to work against the value of the franc and the world buys dollars as it gets more and more nervous about things European and war talk in the Persian Gulf, it should continue to play on the dollar safe haven kind of scenario that we've been in recently. While the Swiss franc isn't considered a risky currency, it certainly isn't the dollar, and that's what matters. As the euro falls against the franc, we could see the Swiss National Bank have to intervene again, and that will move this pair up in solidarity as well. 95-ish area and above is massive resistance on the long-term charts. So because of this, we expect this to be a grind, not a melt up. However, as long as the highs keep getting higher, we are buying on dips, and we do like this pair a lot for the long term. Parity is almost without a doubt our first target, and in fact, we think that this pair could go, of course, given the economic situation in Europe deteriorating, could go much farther. You have to keep in mind that the Swiss export 80% of their goods that are exported go to the European Union. When your biggest customer is broke and going into recession, it's hard to sell items to them. The Swiss economy will get hit hard by an EU recession, as they are very dependent on the health of the European Union as a whole. Going forward, we will continue to buy dips and ride this pair out as high as possible.